Hey guys, Kevin Bupp here, and I want to welcome you to another episode of the Real Estate Investing for Cash Flow podcast, where our mission is to help you build and maintain massive amounts of cash flow through income producing real estate investments. And our guest for this week's show is real estate and land investment expert Seth Williams. Now, Seth is a professional real estate investor and the founder of the popular site retipster.com, which is a real estate investing community that teaches self-motivated people how to make great money from real estate while minimizing risk and creating more time for the things that matter. So, guys, I'm excited to get on to the show with Seth. But before we do, I've got a few quick housekeeping items to run through. First off, if you haven't done so already, go and grab a free copy of my recently released best-selling book called The Cash Flow Investor: How to Create Financial Freedom Investing in Commercial Real Estate. The book was just released a few months back. It's in print form and it's for sale on Amazon for $20, but I'm making a free version available for a limited time to my loyal cash flow tribe here at the Real Estate Investing for Cash Flow podcast. So head on over to kevinbupp.com/free book. Again, kevinbupp.com/free book to claim your copy. Moving on here, guys, if you're an accredited investor who has an interest in partnering with me and my team, head over to investwithsunrise.com to learn about the partnership opportunities that we have. Not only do we have a incredibly stout pipeline of active deals that we're in contract with, but our current offering, which is the SCI Growth and Income Fund 3, currently has a number of assets that we've owned in there for over a year now and has over $20 million of sweat equity that we've already built up since inception. We've got some incredible deals currently in contract. And this opportunity, it's limited. That fund will be closing out here in the near future. And so if you want to invest in deals that are already cash flowing and providing quarterly distributions with a team that has a stellar track record, head on over to investwithsunrise.com. And now with that, guys, I'd like to welcome our guest for today's show, Seth Williams. Seth, how you doing, my friend?
Hey, Kevin, it's great to be here. Thanks for having me.
Yeah, absolutely. We had you on, I think, many years back. I believe
Yeah.
we were talking about that when I was just on your show. And it's been so many years.
Yeah, totally.
These things kind of just fall through the cracks over time. I've been
For
doing my
sure.
show for like 8.5 years, and I know you've been podcasting for 5+ years now, and so just time seems to fly by. And so,
Yeah.
Seth, what I'd love to do for those that aren't familiar with you, who you are, your story, take a few moments and tell us some more about yourself and what it is you do.
Yeah, for sure. Yeah, man. I feel like I do a bunch of stuff these days. So yeah, I guess it's the first thing that I started doing in real estate was land investing. Like that was the first thing I ever actually got traction with and found success at. Started that in about 2008, 2009. And what was it? 4-ish years later, I started retipster.com, where I got inspired by some other bloggers in the blogosphere about basically how to take my knowledge and the things that I'd learned in my business and just put them out there
Mhm.
and build a following and find creative ways to monetize that over time. So I've been running that since then. And just this year, I've started jumping into self-storage investing. I'm building my first storage facility like right now. I'm dealing with issues today. So that's been interesting too. But yeah, so it's kind of this blend of land, blogging, self-storage. And I have owned duplexes for a few years in there too, but kind of got in and got out of those.
Gotcha.
Yeah,
Okay, fantastic. Well, I'd like to dissect maybe each one of those areas, and we'll start with the land investing. I guess
sure.
first and foremost, talk to me about what is land investing? What does that
Sure.
actually mean? Provide some context there, and then what ultimately attracted you to that? What I would call as a niche in the real estate universe. What
Yeah,
attracted you there?
sure. Yeah. So land investing, I mean, that term is kind of a all-encompassing word in terms of land. There's many different ways to do this, but the way that I have done it since I got into it was more like land flipping, where I'm essentially buying a piece of vacant land at a very, very, very cheap price, doing nothing to it, and then turning around and selling it at a higher price.
Okay.
And so I got into this back in 2008, 2009, because I had been spending so much time trying to find deals on houses starting from like 2006, 2007. And I was doing everything wrong. It was a super competitive market at that time when I was getting into it. And all I knew how to do was look on the MLS and try to find deals that way. And just spent so many hours wasting my time. And it was around 2008 when I learned about this idea of, forget houses, go after land. And at first I was just like, what? Like, why would I want to do that? That's Like, where's the cash flow? Like, how do I get tenants? How do I make money? And it wasn't until I understood more about the rationale of what types of landowners to go after and what types of offers to make to them. Because when you do the math, it's very, very difficult to lose money on these things. So how I started was I started contacting people who were delinquent on their property taxes
Mhm.
and owned land, and they would call me back. This would all start with some kind of a direct mail campaign, postcards or letters, and they would call me back, and I'd talk to them more, and then make them an offer. And the offer would be anywhere from like 10 to 20% of what I thought the market value was of their property. So, understandably, a lot of people were not interested, but because of who I was contacting, people who had past due property taxes, there was this kind of this built-in issue with them where if they didn't pay off their property taxes soon, which wasn't a lot, it wasn't a huge amount of money because it's just land, but if they didn't pay this off soon, they were going to lose their property and get nothing. So I could show up at this interesting time where they still controlled and owned the property, and they could decide to sell it to me if they wanted to. And it was just a somewhat of a compelling case. Like, you can let me give you a few $100 now and I'll take it off your hands, or you can lose it and get nothing in a few weeks. And so we just put together a lot of deals that way. And it started with really, really cheap deals, like deals that you would pay literally a few $100 for and then sell for a few $1,000. And that was just to kind of prove the concept to myself. Eventually we started moving up to bigger deals, and just doing more and more of that. And I think, to me, the reason why land worked for me was because um, I had a lot of fear and apprehension about like debt and, racing against the clock and trying to make payments and getting contractors involved if I was trying to flip a house, or dealing with tenants if I had a rental property. And with land, I was just able to get into the game with very little risk. And it
Mhm.
just literally the cash in my bank account. And if something blew up and went horribly wrong, like, it wasn't going to destroy me. It was something
Right.
I could just take it on the chin and keep moving on. And my wife was always, I mean, even to this day, she's very risk averse and doesn't like the idea of, leverage and all this stuff. But even she, like, when she saw how this works, she's like, oh, yeah, I guess that's probably okay. If you want to knock yourself out, Seth, go ahead and do that and have fun. And, uh, and that alone was a miracle for me. So,
Have fun, but make money.
yeah, exactly.
And don't lose the roof over our head, right?
Yep.
So
You
talk to
got
me
it.
about like the size of these deals. You said you started off small deals where you might have been buying tracts of land for a few $100 and then reselling them for a few thousand, and then moved up to larger deals. But just generally speaking, I mean, are these rural plots of land, raw land, on the way on the outskirts of an MSA, like counties away, or just again provide some additional color there as
Yeah.
to what type of land are we talking about here?
Yep. Yeah. So the location is almost always a rural location, like 1 to 2 hours away from a big city. That's not to say I would never buy it in a city, but it would have to meet a lot of criteria for me to do that. And there's a few reasons why you want to go rural. One of them is because when you buy a vacant lot that's like in a city, a lot of times you'll start to see a lot of rules and requirements that you have to adhere to. Like, you got to mow the lawn, it's got to look presentable, and all this stuff. Whereas if it's in a rural area, nobody cares about that. It's not a big deal. Just let the thing go, and that's fine. And also, a lot of times the lots that are available in a city, I don't want to say all the time, but a lot of times they're kind of like ghetto lots, like in
Hmm.
just the bad part of town. And the only real purpose for that lot is to build a house. But not many people are going to spend the money to build a brand new house in the middle of the ghetto. So
Right.
it just kind of self cancels itself out. So that's why, working in those rural areas, 1 to 2 hours away from a city, possibly further away if you want to. And yeah, and I think the other rationale for that is because a lot of times that ends up being like a getaway for people who do live in that city. Like, it's not so far they can't get to it. It's kind of like in their minds, their weekend place where they would go to their cottage or park their RV or
Hmm.
do whatever they want to do there. And yeah, and there tends to be just a lot of apathetic owners out there who own properties in those places. Usually they bought the property 20 years ago and they kind of forgot about it, or maybe they inherited the property. And there's a good place to start a negotiation from. And a lot of times there's not really a ton of negotiation at all. It's like, here's my offer. And if you don't like it, thanks. See you later. It's not like I'm
Yeah.
bending over backwards to try to meet them halfway.
What would you say the typical use is of those that are buying these rural plots of land from you? I mean, what is the most common uses? Hey, they're buying it and they have the intent of doing what with it?
Yeah. Well, in my cases, it's almost always a vacant residential lot where the person is going to be the end user. Like they will theoretically use it to build something there or park an RV or go camping or recreational purposes, that kind of thing. But that's kind of a function of the types of properties I go after. Like I typically don't pursue commercial land just because there's environmental due diligence required. And sometimes the pool of buyers are fewer for that kind of thing. So I just kind of ignore that. And I'm certainly walking away from some opportunity by not doing that. But that's part of why it works out that way for me. I know other land investors who will intentionally go after much bigger stuff. Perhaps it's commercial. Maybe it's just a huge agricultural lot and they want to subdivide it and rezone it and all this stuff. I don't really get into that. And again, it's sort of a opportunity cost thing. Like I'm choosing to ignore that so I can
Mhm.
pursue more of this other thing. But yeah, I mean, once you start doing that, I mean, then you're talking about making hundreds of thousands or millions per parcel, depending on
Sure.
how big it gets.
And then the average size of these parcels, I mean, would it be an acre plus in size?
Yeah, yeah, and I guess for me, it's usually somewhere south of 40 acres. That's kind of
Okay.
what, but it's more important than the size is more the value. Like, what does 40 acres mean in one
Mm.
place versus another place? I mean, there are like quarter acre parcels in New Jersey worth, $1 million. So it's more about like, what is the actual value of that property and back into it from there.
Yeah. So it brings it to the next question. How are you going about finding the value? So you're sending out direct mailers, you're making offers at 10 to
Yeah.
20 cents on what you perceive to be today's market value. I'm assuming it's got to be pretty difficult to find value of these rural, pieces of land. I mean, not that they don't ever transact, they surely do, but it's probably not as often as one might expect if they live in like a suburban type market and there's houses
Yeah.
trading all the time and vacant lots being sold for developers to come in and build homes and things like that. So how do you come up with these values? Is there an efficient process there?
Yeah, I mean, that is one of the best questions. And it's one of the most difficult things for land investors because unlike with houses and buildings, which a lot of the data you need to figure that out is readily available with
Mm-hmm.
land, a lot of times it's not. If you have a situation where it's an infill lot, like one of, 20 or 30 or 100 similar lots in the same subdivision, then it gets pretty simple because you have very comparable properties to look at the recent sales prices.
Mm-hmm.
But, if you think about how an appraisal is done for real estate, it's usually two of three approaches. There's the income approach, and there's the what does he call it? The sales comparison approach, and
Mm-hmm.
the what is it? The cost to rebuild the thing.
Yeah,
So
replacement costs. Correct.
replacement cost.
Yep.
Sorry, wasn't coming to me, but so we have a lot of that stuff with a house or a building, but with land, there's no reconstruction a cost, and there's usually no income associated with it. So it's just the sales comps, if there are sales comps at all. And a lot of times, in Michigan, for example, it's very common to find a parcel that is literally one of a kind. Like there is nothing else like it anywhere in the near vicinity. And even if there was, like it didn't sell recently. So a lot of times what you have to do, it's sort of like this art and a science thing where you have to figure out, okay, what comps do exist and figure out what the cost per acre was of those. Use it to kind of like back into the value of yours, also taking into consideration, is my parcel similar to that one in any way? Like, is it zoned the same? Is it have similar road access? Is the topography similar? Is there a view? Is there access to water? All this stuff. And you can look at things like the local municipalities assessed value, which is usually not that accurate, but it's something. Like if
Mm-hmm.
you literally have nothing else, you could feasibly take that. You could also look at like a neighboring property that maybe does have a house on it and figure out what is the county's assessed land value of that, and how would that translate to mine if somebody wanted to build a similar house there. There's also tools like there's a couple tools that are available to land investors. It's basically just software that was built in people's garages and basements. But there's, one's called Price Boss, one is called Priced, where these guys have done their best attempt at taking the comps that are out there and quickly formulating a market value. And even that is definitely not a slam dunk accurate thing, but it's something to kind of get you halfway there. And you can sort of use your own reason and logic to determine, is that accurate or not? And ultimately, like, usually you cannot get a rubber stamp 100% certain answer, but even then, that's why it's important to have a super discounted offer, because if you end up being wrong, there's a big profit margin built in to protect you.
Sure, sure. And then, so what is the exit strategy once you acquire a piece of these properties? Are you just flipping that, or are you selling it on terms? What do you utilize in your business?
Yeah. So these days, my goal is to sell them for cash. But if somebody is willing to do seller financing, it fits really well with this business model because,
Meaning that they're willing to, buy it from you on terms, like they're willing to give you a down payment and make
yeah,
payments. Okay.
correct. Yeah. So, me as the seller, I would
Yep.
accept either no down payment or some kind of down payment and then take payments for the next 3 or 5 years. And the reason it's really beneficial is because, especially for like a vacant residential lot, if somebody doesn't have an immediate plan to develop that or build something on it, then most banks want nothing to do with that. Like, you
Hmm.
can't really get traditional financing for that. So in that case, they would either need to have all the cash or have access to like a HELOC or some kind of liquidity to buy it. And that's hard for a lot of people. A lot of people just can't do it. And if I'm not willing to finance that, then I'm just severely limiting the pool of buyers that have access to this property. So, and the nice thing is you can really structure it however you want to. I mean, you can charge, whatever reasonable interest rate you want. You can stretch out the amortization however far you want to go. You can ask for whatever down payment you want,
Hmm.
and really just work it so that it makes sense for both you and them. And so that's all like the good stuff about it. And also, because, I bought this thing cash, there's no payments I need to make. So once I make my money back, it's all pure profit. But the downside is, depending on how much, background and due diligence you do on these borrowers, and a lot of people I know do literally nothing. They just, if you have a pulse, we'll do it.
And you mean, like,
Um,
credit checks, things
yeah,
of that nature, right?
yeah, exactly. And the reason that a lot of people don't care and don't do much is because, there's nobody living there on the property. Like, it's, if they end up being a deadbeat, you don't have to like kick them out or anything like that. It's just land. And depending on the state, the repossession process could be easy or it could be difficult. But if it's easy, you can essentially take the property back and sell it all over again. But I've found that, at least in the states where I've tried to do it, the process, it wasn't always like difficult, but it was just annoying. Like, I just didn't want to have to do that. So these days, when I sell, my goal is to sell it cash
Hmm.
and sell it at a discounted price as a result of selling it cash. And again, opportunity cost. The nice thing is I can actually get all my money back and buy more properties and keep the process going. Whereas if I was selling it with seller financing, I mean, it can take years to get your profit and keep that moving.
I can
Um,
imagine, though, if you get enough of those, enough parcels sold on terms, that you could generate a really nice
oh
reoccurring
yeah,
monthly income stream.
for
Correct?
sure.
Hmm.
Yeah. And that's, I mean, that's a very notable thing. So people who do like seller financing and they jump into it with both feet, I mean, yeah, they can be making like 80 grand a month or more just on terms payments from these people.
Hmm.
And there is a bit of work in managing that, depending on if you use a loan servicer to do this for you or if you have software handling the payments. But I know, like, if you don't do credit checks, as many people don't, like, you absolutely better expect a lot of these people to stop paying you.
Yeah,
And then you
I
got
would
to go
say the
back and forth. And
default rate's got to be fairly significant, I would think, and
yeah.
maybe not in the best of times, but if there's any hiccup whatsoever, I mean, if you're selling a piece of land for 15,000, you took 2,000 down, and monthly payments, I don't know, just throwing numbers out there, a few $100 a month, and that individual was already, not doing credit checks, but to them, they bought it on a monthly payment, and if something,
Mhm.
ultimately happens in their life, where there's a hiccup or a road bump financially along the way, then that's probably one of the first things they'll cut out of their monthly budget is
Yeah.
a piece of land that they aren't necessarily using.
Yep. exactly. And
Hmm.
I, I know some other folks who do this who they do the same kind of seller financing thing, but they just focus on like the most desirable properties and they actually do get to know their borrower and they make sure they have some kind of plan to like build their house on it so that like they actually need this property. They can't
Yeah.
just toss it to the wind. And I think people who do that have a much better experience with this. Like there's not all these unexpected surprises and stuff.
Hmm.
So I think it just kind of depends on how you go about it and if you want to be in the lending business in the first place. Some people like me just don't want to deal with it.
Yeah.
So
How often do you come across a parcel of land, or let me rephrase the question. Have you ever come across a parcel of land that you were able to pick up at a really fair price that was so attractive, whether topography or location, whatever, that you decide to keep it yourself?
yeah, I have. That's actually, I mean, this storage facility I'm building right now. That was the situation. I bought the thing. I was actually just off the MLS, and I I knew the price was pretty good for what they were, for what the property was, and I knew the location. It wasn't zoned commercial when I bought it. It was zoned residential, so I had to walk through the rezoning process, which was actually the first time I had ever done that. It was kind of interesting, but yeah, so I got it rezoned, and now we're building a storage facility. And my plan at this point is to hold it long term,
Hmm.
unless it's just a nightmare and I can't stand it. Then I'll sell the thing. But yeah, so that would be one example.
But that you didn't necessarily buy that at 10 to 20 cents on the dollar, correct?
Correct. Yep, that was
Okay.
not the case for that. Yeah, I guess yeah. To answer your question more directly, so anytime that I'm out there making offers for like nothing, um, one of the trade-offs of trying to find motivated sellers that way is that you don't really get to pick and choose the location. I mean, you
Hmm.
send out thousands of mailers and whatever comes back, and you figure out the values and you make offers based on that. And I'm not so concerned about like whether I find it useful. It's more just a matter of, is it desirable? Is it useful? Like, is there a market for this? Because
Hmm.
if there is, someone's going to buy the thing.
Sure.
And so anytime I've ever like held one of those properties for more than a year, it was because I just couldn't get the thing sold very fast. And it
Mm.
wasn't because I wanted it for myself.
Well, there we go. Next question. What is the typical turnaround time, on selling one of these properties? I mean, how long do you normally have to market it to find the ideal buyer? And I know that there's probably a range there, but just give me an average, if you would, how quickly these things turn.
Yeah. For me, it's usually like 3 to 6 months on average.
Oh,
And
wow. Okay.
yeah,
Longer than what I expected.
I mean, a long hold period would be maybe like 15 months, something like that. And short would be like 24 hours. So sometimes they sell that quick too.
And
And a lot of this is also a function of the market you're in and how desirable the property is in the first place.
are you mostly operating in Michigan? I know you're based out of Michigan. Is it mostly in Michigan where you're doing deals?
That's what I've been doing this year. Although in previous years, I've worked in, man, I don't even know how many states. A lot of states I've never even been to, like Washington and New Mexico. And so yeah, I've been focusing more on Michigan just because that was where I originally started. And I just know this market pretty well. It's been a while since I've worked here. But for the past several years, I've not been in Michigan at all.
Hmm. So flipping gears or switching gears to the self storage development. This is your first ground up development project. What pushed you into the self storage realm?
Yeah. Yeah. It's something I've always been fascinated by. And I mean, like, seems like everybody I tell about this, they're like, oh, I always thought that was such a great business model. And I'm like that too. It just seems like a cool type of business that's, uh, it's not, it's not no work. I mean, there's certainly some management and that kind of stuff involved with it, but it's less intense than maybe managing a big apartment building and that kind of thing.
Hmm.
Um, so basically, I want a long term cash cow. Is kind of what I'm looking for, and I had spent the past, it's probably started 3 years ago when I started really trying to understand this business and like, what does it have to offer? Like, what am I hearing that's hype? What am I hearing that's real? Like, what is the actual difficult thing about running this business?
Hmm.
And was in a couple mastermind groups and just learned a ton of stuff. I'm still learning a ton of stuff from people who are in the trenches of this business. And it just seems like, a decent set of benefits for the costs.
Hmm.
And um, I think I was going to say, I was going somewhere with that. Um, I think my goal long term is to probably own a few of these things. And with this first one that I'm putting together, kind of just trying to understand, like, can I do this? Like, is this something I actually enjoy doing? Or when I get into it, do I realize, oh, this is actually not what I signed up for? And originally, what I was trying to do was buy an existing storage facility. And even now, if I could have found one, I would have rather done that, because a lot of the questions have already been answered. Like, the design is all finished. Like, there's a lot of stuff involved with developing anything new, and just a lot of huge decisions to make. And it's a lot less intense if you can just buy an existing one. But I had sent a direct mail campaign to every storage owner within an hour of me, and I couldn't find a single deal. Like, the only people who would call back, they either wanted to know if I knew of anything they could buy, or they were asking, like, twice as much as what the thing was worth. And they're probably getting it in this market, honestly. So
Yeah.
um, I I never really wanted to build a new one, but just seeing the lack of apparent opportunity and looking at the numbers of what it would take to get into a new one, it's like, maybe I'll do this. This would be an interesting
Yeah.
adventure.
Yeah, and I think that, I mean, you're obviously there's some benefits, given the built-in equity on the development model. Obviously, there's some risk on the development side, but you're building a brand new product. You've got a yield on cost there associated with the development piece of it, and then again, you've got a brand new product when it's all said and done, and so you don't necessarily have to worry about any mechanicals. And there's not a lot of mechanicals, items to fail in the self storage. I mean, it's a metal building probably on a concrete slab, and so
Yeah.
there's just not too many points of failure there. But still, it is nice to have a brand new product that literally is fresh and clean, and it's got the most efficient layout, the most efficient roll up doors. And
Yeah.
are you going to be integrating um, um, uh, any technology related to not having a manager on site there? Are you going to try to automate it at all?
Yeah. Yeah. That's the goal. It's going to be an
Okay,
unmanned facility.
great.
And
Talk to me
uh,
about that. What does
yeah.
that look like?
Yeah. So I didn't even really know you could do this until I got in a mastermind group. And that's what everybody was doing, was an unmanned facility.
Hmm.
And technology has changed the storage business a lot in the
Hmm.
past, like 5 to 10 years. Even like in the past 12 to 24 months, a lot of new stuff has come out. But um, yeah, so even the way that mine is going to work is people can basically pull up to the gate and take out their phone and scan a QR code and rent from my website from their phone in a few minutes. There's a short application form they'll have to fill out, entering in all their details, take a picture of their driver's license and upload that so I know who they are. And they will assign them to a unit and assign them a gate code. And even like the gate access, there's a mobile app so that if you want, you can not even touch the keypad. Just take out your phone, and from the app, you can open it that way.
Hmm.
And some facilities have that technology on the actual unit locks. So people don't even need a lock. Like, they just take out their phone and open up their individual unit that way. I'm probably not going to install that just because of the cost. And I feel like the technology is almost there, but it's not quite there yet. But that's how a lot of the stuff works now. So there's no need for kiosks. There's no need for a person to be there on site for this type of facility. Now, if
Hmm.
if I was building like class A storage with like indoor climate controlled, all that stuff, then I think there's a little bit more in terms of moving pieces that can fail. And, maybe if somebody gets stuck somewhere or trapped in the hallway or something like that, it would help to have a manager on site. But that's not what this is going to be. This is just drive up cold storage, and there's not a whole lot to it.
Got it. Got it. Outside of real estate, is there anywhere else that you're placing your own personal capital?
At this point, not really. Although I'm, it's funny. Just a couple of weeks ago, I was at FinCon, this financial conference for like bloggers and YouTubers and that kind of thing. And I met a guy who's got a really interesting approach to uh, just trading on the stock market. He was explaining it to me in a way that I never even knew. And frankly, I didn't want to know. Stock market isn't really my thing. I've never been that interested in it, but he was explaining a lot of the rationale of when and how to get in while a well-known stock is going up and down. So anyway, I guess the short answer is no, but I'm pretty interested in that. I'm trying to learn more about that right now.
Okay, fantastic. And
Yeah.
Seth, for those that want to learn more about you and just keep in the loop of what you have going on, where's the best place to find you?
Yeah. Retipster.com is like the home base for all the content that I put out there. Otherwise, you could look on YouTube or Facebook or any of the social networks for just RE Tipster, and you'll find us.
All righty. Fantastic. Well, Seth, always good to have you back, my friend. Good seeing you, and
You
wishing
bet.
you all the best.
All right. Thanks, Kevin.
Alrighty, guys, that's all we have for this week's show. So until we meet again next week, this is your host, Kevin Bupp, wishing you huge success. Take care.